How's it going, everyone? I'm Brandon from Team Solo, and welcome to the Debt Hotline. And I'm joined today with Melinda. Melinda, I'll give her a chance to introduce herself, but if I could just read a little bit of her bio to set the stage a bit. Melinda is a credit expert and the owner of Street Financial. Once facing poor credit and overwhelming debt herself, Melinda decided to turn her financial struggles into her greatest strength. By working diligently to raise her credit score into the high 700s, she not only transformed her own life, but also discovered a passion for helping others do the same. Melinda's mission is simple: to show that no matter your starting point, you can rebuild your credit and reclaim your financial freedom. So without further ado, Melinda, I'll let you introduce yourself.
Yeah, so he pretty much said my bio, but yes, my name is Melinda. I have been doing credit repair now I've been in the credit space now. I wouldn't say necessarily credit repair, but I have been in the credit space now for the last 6 years, a little bit right before COVID. When COVID happened, that's when it kind of took off because everybody was at home and just wanted their credit fixed, and everybody was posting their results, and it just took off from there. I've always been in the financial space. I've worked at some of the largest institutions prior to quitting my financial career and going off as an entrepreneur. I worked at some of the largest banks, and even with me having a large background in financial, like I would say, because I worked at three banks. I worked at three banks. And even with the extensive banking experience that I have, I still did not know about credit. So you would think that I have this background in the banking industry and I would know a lot about it, but I absolutely did not know about it. And they did not teach me about it. And so I did struggle with my own credit, and I was able to fix it myself. And from there, I just started posting my results and then took off. And now I have a pretty large following. I mostly do my stuff on TikTok, but on Instagram and YouTube. But TikTok is by far my biggest following, and I've helped thousands of people. More than 1,000 people. I've helped several thousands of people on TikTok get results, and here I am.
There we go.
So it's
All right.
definitely doable.
Appreciate that, Melinda. So just diving into some high level questions to set the stage. Uh, First question here is, what are the first steps someone should take to start rebuilding their credit after it's been damaged?
So the first step that you have to take is you're going to have to pull an official credit report. A lot of people want to use Credit Karma, which is fine. It's a great resource, but if you're really wanting to get results, you're going to have to pull an actual credit report. I suggest Identity IQ. They show all three side by side. They do give you a free trial. So if you're someone who wants to just get your credit report, get the free trial and cancel it. But if you are somebody who wants to actually get the results and actually work on it, you need to keep it activated for the duration of you working on your credit. So you have to have credit monitoring. There's no way for you to get results if you're not monitoring your credit correctly. So, first step I always tell everybody is get an actual credit report. You're not going to be able to use the free services that the banks offer. You're not going to be able to use Credit Karma. You need to use an actual credit report. At the very least, you can get a free credit report with annualcreditreport.com. They do give you like three a year, I think. I don't know if it's changed because I know during COVID, um, it used to be once a year, but I think they changed it to 3 a year. I don't think they put it back to once a year. I think it's still three a year. So you can definitely get a credit report there, but that's going to be the first step. And then you're going to want to highlight everything that is negative. So anything that has the word late, collection, derogatory, any closed account, look at the closed accounts and see how it's reporting. And then from there, that's when you'll start the dispute process. But this first step is going to be getting an official credit report and credit monitoring.
Got it. If you are looking at your credit report and maybe you see some errors or maybe some inaccurate information, how would you recommend someone deal with something like that?
So if you see errors or if you see something that's questionable, if you see something that's hurting your credit, the first thing that you're going to want to do is you're going to want to have them verify and validate this. It's 2025. You can go on to ChatGPT and you can say, "Hey, this is my credit report. Send a letter to all three of the bureaus, and I want to verify and validate all of the accounts that are in question," and you can list them, or you can say whatever. I wouldn't say whatever accounts you think are in question. Just list the accounts that are in question and have ChatGPT make you a letter.
Got it. Got it.
I have letters on my website too, streetfinancial.net.
There you go. How do Curious, how do debts factor into someone's credit score? So if someone is has a debt that they're that's in collections, or maybe that they're trying to pay off, does it affect it positively, negatively?
If the debt is in collections and they're trying to pay that off,
Correct.
anything in collections is going to affect you. It's not going to be a good, it's going to negatively affect you. So, with that, I would suggest if you plan to pay that collection, you're going to want to demand that they delete it as well. If you don't ask them, they are not going to offer it to you. Most times they don't offer it to you, but you want to tell them, "Hey, I'm willing to pay this debt, but I need it to be deleted from my credit report if I'm going to pay this debt." So you do have negotiation. A lot of people don't utilize their negotiation rights that they have when it comes to collections and debt, because these people come off as like they have some sort of authority, but you really are the one in power because you're the one that's going to pay it. So they're not in business without you paying it. So you have
Mm,
to put on your negotiation hat and tell them that I want this deleted, otherwise I'm not going to pay it. Or you can ask to speak to somebody else, but they usually will work with you if you ask, but they're probably not going to offer it.
got it. Is there ever pushback when you ask for them to delete it? Like, are there ever reasons that they would give you why they wouldn't delete it?
Sometimes I honestly don't know why they don't. Sometimes they just say they can't. There's really no reason why they shouldn't. But sometimes they'll say that we can't. We don't have the ability. But I think honestly that they just say whatever because it will be the same LVMB. Like, I'll just say LVMB because they're a very popular collection agency. Midland, LVMB. Let's just say they say that they can't, but then they do it for others. So it's not that they can't. It might be an extra step, or it might be extra work for them or something. Because at the end of the day, we're all human and people are lazy. So sometimes people don't want to take that extra step. So it can definitely be done because it doesn't make sense that some people can do it and some don't, and they do it for debts that are like 20,000, but they won't do it for a debt that's like 500. So that it doesn't make any sense. I think that you just need to speak to another representative.
Interesting. Okay. Another question here. What is considered poor or good credit? Because I think when you go online, a lot of different numbers are thrown out there, but there's never really a clear definition on what a healthy credit score look like. So I'd love to hear your thoughts on that.
So this is a really good question, and I say all the time, your score does not matter. Obviously, I would say you want to be at least above a 640, but there are people who have a 640 credit score that have way better credit than someone with a 770. So just because you have a 780 does not mean you have good credit. There could be someone with a 740 credit score. They don't have anything negative on their credit report, but they just may have high utilization. So if your credit is down due to utilization, that just means you just need to pay off some of your credit cards down, and then it's automatically going to go back up. So because credit is measured in five different categories, so 35% is payment history, and the second biggest category is utilization at 30%, and the rest is 15, 10, 10. So if 30% of your credit score, which is the second biggest bucket, is utilization, so obviously when you're maxing out your credit cards, that's going to bring your score down. That doesn't necessarily mean your credit is poor. It just means that your limits are high. But a lender would much rather do some credit or do business with somebody who has an American Express, with $100,000 line, and they have all these other credit cards on their credit report. Their debt's just a little high than someone with a Capital One, with a $500 line on Capital One and a $500 line on Credit One, but their score is 770. The lender would much rather work with that 640 because that 770 has baby credit. That's kind of what they say in the credit world. It's like a thin file. So
Got it.
score is not everything, but I would say at least like a 640. Obviously, seeing like a 700, 800 credit score looks amazing, but it needs to be quality.
Got it. How would you recommend someone think about how much credit utilization they should aim for?
I always say 10%, 10% or less if possible. And the best way to do that is like if you absolutely have to carry debt, that's understandable. So you just need to have bigger credit cards. So if you have like a $500 line, and technically 30% is the real answer, but I say 10% just to be safe. But 30% is the real, like, legit answer. You want to stay below 30%. 10% makes you look even better, but in the lending and credit world, 30% is where you need to be. So if you have a credit card and you have $1,000 line, well, you only can spend $300 of that before it starts affecting your utilization. But if you have $100,000 credit line, now you can spend $30,000 on that credit card, and it's still the same thing as somebody who has that $300 on that $1,000 card. So it's just being able to have access to more so you can spend more and it doesn't hurt you.
Got it. That makes sense. How do you increase your line of credit? Because it sounds like your utilization, the only way to make it lower is either you spend less, you have a lower utilization from what you have, or you have a higher amount that you're able to spend. So how would you recommend someone increase the amount they're
So this is
allocated?
my favorite. This is my favorite thing. So there are multiple ways that you can access large lines of credit. I always tell people get into a credit union because credit unions are like house of the high limits. So they go off of membership. They don't only just go off of credit. So if you can get into a credit union, preferably Navy Federal, that's my favorite. But any credit union is going to work because they typically give higher amounts. So let's just say you have a credit card with a credit union. They typically, like a Capital One card, they might approve you for like 500. The Navy Federal or a credit union may approve you for like 3,000 as a starter card. So what you have to do is once you get that $3,000 card, you don't want to spend more than like $800 on that card for the first 90 days. The more you show the bank you're not using it, the more they're going to give you. So now you're going to ask for a credit line increase. They're going to see you have a $800, you're only using $800 and you have 3,000 available to you. Well, they're going to give you more. So now you turn that $3,000, $4,000 card into an $8,000 card. Now you can spend a little bit more. So now you got this $8,000 card. Now you go apply for another card. They're going to see you have an $8,000 card and you only have less than $1,000 on it. Now they're going to approve you for like 10,000. So now you got $18,000 available to you. So now you can spend a little bit more. So you do have to mentally tell yourself you don't have it all available to you, but there are ways that you can do that. So there's Cred AI. Cred AI is a bank account, but it's the only creditor that does this. Definitely recommend looking into it, but it reports a $1,500 trade line on your credit report. So what it will do is it will show on TransUnion, Experian, and Equifax like you got approved for the 1,500. You didn't really get it, but it shows up on there. So when you go and apply for something, they're going to see you have a $1,500 card that you're not using. So that makes you more attractive because it makes no sense, but the more you can prove you don't need it, the more they're going to give you. So by having that on there, that's a good starter too. So you have that $1,500 on there. It shows that you're not using it. You'll probably get like 2,000, 3,000. After that, you want to really stay on that 10% while you're trying to build. Then
Got it.
once you get to like 20,000 available, now you can go use 30%.
Got it. Do you recommend someone pays off their credit card bill in full every single month, or should they have some sort of utilization that posts to their bill month over month to show to show the company, hey, I'm using my credit card. I have some utilization, but still under that kind of 10% range.
You can pay, if you can pay off your credit card every single month. That's wonderful. I highly suggest anybody that could do that definitely do that. But you don't want to just leave it vacant. So you want to at least use your card because they can shut your card down. So if you're not using your card, which I have a credit card that I haven't used in probably like a year, and I really need to use it because I don't want it to get shut off because now that affects my age. That affects history. History is 10% of your credit score as well. So you definitely you can pay it off every single month if you can, but make sure you're using it too. If for
Right.
somebody who's not using their credit card, you want to use it at least once a year.
Gotcha. Okay. Question from the audience here from Tanya from North Carolina. She asks, after my divorce in 2023, most of the joint accounts hurt my credit. I paid off one collection and started using a secured card. My score is around 590 now. What's the fastest way to reach 680 within a year?
I would suggest so if I don't know how the secured card looks. I don't know how long you've had it, but if your debt is pretty low on that secured card, I would highly suggest ask, and depends on how long you've had it, ask for them to graduate your card. So you can actually ask for them to graduate your card, meaning they give you your money back and they turn that into an actual credit card because a secured card on your credit file, it's fine, but it shows up as secured card. So that shows like you're trying to build your credit. So you want that to report as a regular credit card on your credit report. So first you want to graduate your credit card. The next thing is if the collection that you paid off, if you already paid it and it's still reporting on your credit report as paid or partially paid or just closed or however it's reported, if it's still on there, you want to ask for a deletion. That's going to bring your score up because that negative item is off your credit report, whether it has a $10,000 balance on that collection or a $0 balance on there. If it's still on your report, it hurts you. So it does not matter if it's paid or if it's not paid. You need to have them delete that from your credit report. Another thing that you could do is if you need to bring down utilization, you can always get Cred AI. It's on the App Store and it's free. There's no inquiry as well. So there's really no downside to it unless you have too much new credit because it does show up as a new line. So if you have too many new accounts, you don't want to get Cred AI because history is part of your credit score as well. So you don't want too much new credit.
Makes sense. Hopefully that was helpful, Tanya. Hopefully you're listening. Another question from Marcus in Texas. I lost my job in 2022 and my car was repossessed last year. I'm working again and paying bills on time, but I still have 3 charged off credit cards. Should I try to settle them or just focus on building new positive credit?
Well, in order to build new positive credit, you're going to have to get that stuff removed from your credit report. Otherwise, you're only going to be able to get starter cards. And starter cards are not necessarily a bad thing, but they don't really go up that high. So, like the kickoff credit card, like they have like credit one credit cards that are starter cards. They're great, and I think that they're great starter cards, but they're not going to get you the quality credit that you're going to want with those negative items still on your credit report. So you're going to want to dispute those charge offs off your credit report with the credit bureaus. And then you're also going to want to, with the repossession, good thing with repossessions is you can actually dispute that with the actual lender and they'll probably remove it from your credit report. You're still paying the debt on the side, but it's off your credit report. So now you can move forward. So, and that's another thing too. That's another story for another day. But just because something's off your credit report does not mean you're not financially responsible for the debt. It coming off your credit report just means that you are able to get new credit, you are able to get better rates, approvals. Anything that is not on your credit report, you do not have to disclose.
Got it. That's helpful. All right. Moving along. Also, for anyone watching, feel free to message in the chat if you have any questions or call the debt hotline. Gwen from Georgia. This is a long. I think she kind of gave a little bit of background on her situation, so I'll just read through it here. Gwen from Georgia says, I inherited my home in 2012. Around 2021, the foundation and floors began sagging, and insurance won't cover the repairs. I had a fire in December 2023 that destroyed 2 storage buildings and damaged the back of my home, porch, and carport. The fire wiped out my storage, shipping supplies, lawn equipment, tools, and much of my resale inventory from an online resale business. It's terrible.
I'm so sorry.
I had to rely on credit cards to replace essentials and restart my small online resale business that she sells on a couple of different platforms. I now have 2 charge-off cards, 1 late payment, and 3 small active cards in good standing. When one Synchrony Bank card defaulted, they closed all of my other accounts. I've,
Synchrony.
yes. I've arranged 0% interest payment plans for 5 years on the remaining accounts. So I think she says here she needs help with the best and fastest way to rebuild credit so I can qualify for home repair financing or assistance. My current debt does not include the 2 charge-off, which is approximately about $22,000. No one is contacting me as helps or for help, and they sent a cease and desist letter to my home. Nothing is in collections, and I am not being sued. Any advice and assistance to get my credit back on track will be greatly appreciated.
I would highly suggest to dispute those. You're going to want to actually fight for inaccuracies, which Synchrony is notorious for that. So, Synchrony, I've made several videos too about Synchrony. They will shut off your card so quick for anything. They are notorious for that. They are, and if you have other Synchrony accounts too, even if they're in good standing, they will shut those off. So what I would suggest is you want to call Synchrony and ask them if they can remove these debts. So they have off the record deals as well. Nobody's going to tell you about this if you don't ask about it. Ask for an off the record deal. So that is basically you are going to agree to keep paying those debts. You typically have to set up some type of automatic, like an auto pay, where they're taking a certain amount from your account to pay those debts on the side, but it's not on your credit report. So you want to get an off the record deal where you can basically still pay those, but now you can go ahead and use your credit once those are off because those are holding your credit back. So once you get that off your credit report, you can go ahead and apply for financing, or your credit report will be more attractive. Again, you don't have to disclose what anything that's not on your credit report. So when they lenders and creditors pull your credit report and they don't see those Synchrony accounts there, you're not going to want to disclose them. So I would highly suggest, and Synchrony is good for doing this because they're notorious for closing accounts, but they're really good with off the record deals. So I would definitely call Synchrony and see if you can get an off the record deal. If for whatever reason they're not willing to do that, you're going to want to dispute for inaccuracies. And so there's usually inaccuracies where they're not able to provide the type of proof that they need. So first, I would suggest calling them. Second, if that doesn't work, you're going to have to dispute them.
Got it. What does that process look like calling Synchrony and then asking for help? Do you find that it's typically a successful route? Does emailing work?
I would call. Definitely get on the phone. A lot of times, I always recommend calling and getting on the phone, especially with Synchrony. They're notorious for this. They're really good with working out off the record deals. Some banks don't work out, like American Express. You're not getting an off the record deal at all. But Synchrony, they will do it. Most times they will, especially if the debt is like under 20,000 each. I'm not sure what they are, but you said the total debt was like 22 something. So I'm assuming that's each of them are not 20 grand. So as long as they're like 20 grand or less per credit card or credit line or whatever it is you have, then you'll be fine. They're really good with working with you. Most creditors are good work. Like a lot of times most creditors will work with you, especially with lates. If you know you're going to be late, you call them ahead of time, they will usually work something out because a late payment hurts so bad. It's the biggest bucket on your credit report. And I know you mentioned that you had a late payment. I'm not sure how long ago the late payment was, but if it's within the last 3 months, then you're going to want to dispute that with the actual creditor. After 3 months, it's almost impossible to come off. It takes 24 on time payments to reverse the damage of one single late payment. And it can drop your score anywhere from 10 to 100 points. So you really want to be proactive if you know you're going to be late, because they will work with you. Most creditors and lenders do not want to mark you late.
Will they work with them if it is late? So, for example, I know Gwen shared that the late payment was from June, which is a little bit more than three months ago.
If it's from June, I don't know. I don't want to say yes. I don't want to say no. I would highly suggest when you call in ASAP, since it was like August, September. It is out of the 3 months, but it's not too far out. So I will get on the phone ASAP. If not, as long as you make 6 on-time payments, it's going to start rebuilding itself back up.
Got it.
You can always
Hopefully,
dispute it though. I just know late payments are very hard to dispute because it's a modification of an account. The It's easier to delete an account than it is to modify an account. So if you want something to remain on your credit report, but you just want it updated to current or modified, that's harder than just completely removing the account.
I know we have a question here that I think might be relevant for this conversation, but Will says, what if you get sued by a creditor?
So
Wondering
you're
if
in a
that,
solo suit.
yeah. So I mean, depending on the stage, um,
Mm-hmm.
right? Like you could go to solosuit.com and use our debt answer product, where that would help you respond to the debt initially, and then when it comes to negotiating the debt, you can use our Solo Settle product, which it's a consumer initiated platform, so you can send an offer on the debt payment directly to the collections agency that's working for the creditor that's suing you. So that's what I would recommend. But yeah, I guess in terms of the context of maybe Gwen's story, I'm not sure if that changes. Like in terms of being able to get an off the record deal, maybe you would still call the creditor. But yeah, I guess I don't know, Melinda, if you have anything to add there.
Well, when people ask me if they get sued by a creditor, I always refer them to contact Solo Suit, take a look at Solo Suit, because they're gonna have better answers than me.
I appreciate that, Melinda. Thank you. Cool. I think we have time for maybe one more question. Jamal from Florida says, I've been renting for years and want to buy a home, but my credit score is 610. What are the most effective ways to raise my score quickly to qualify for a mortgage? So I think you may have touched on this a little bit, but I don't know if you have anything else you want to add here.
Well, you really you can get a mortgage with a 610. It all depends on what's on your credit report and where you need help. Like I said, credit is measured in 5 different categories. So if I don't know if it's a 610 because utilization is high. If that's the case, then you just need to pay down debt. I don't know if you need more history. If that's the case, then you're going to become an authorized user on somebody that you trust. So you can piggyback off of someone's credit history. So if you have a trusted family member that has good credit, they can add you on as an authorized user. You don't have any access to their credit. You don't have any access. They don't have to give you a card or anything. You're literally just piggybacking off of their credit. And if it's a late payment in the last 3 months, you're going to want to dispute that ASAP. So it just depends on the category where you're being hurt. I would have to, I mean, you would have to see where your credit is being affected. But Experian has a great free tool. If you go onto Experian.com, set up an account, it will tell you exactly where your credit is hurting the most. So it shows the 5 categories, and it will show you which ones you're green on and which ones I think are orange, like need a little bit of work, and which ones are red. So I would definitely recommend using that free tool and seeing exactly where your credit is hurting, so you know which category to work on.
Perfect. Well, hopefully that was helpful, Jamal. And I think that was it. for the show. Thank you everyone for tuning in. And Melinda, I can't thank you enough for offering your time here to share your wisdom with our
Of
audience.
course. Thank you guys for joining in.
All right. Bye guys.
Bye.